And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live from Channels HQ right here in Lagos. We have a packed show for you, but let's take a look at some news now. We'll see the number of taxes payable in Nigeria will be cut from 62 to less than 10 as the federal government continues to take steps to reduce multiple taxation. Chairman of the Presidential Committee on Fiscal Policy and Tax Reforms, Taiwo Oyedele, announced this decision during the 53rd Annual Conference of Institute of Chartered Accountants of Nigeria. He said it became imperative to make the cut to deal with the issue of multiple and informal collection of levies, which have made tax administration cumbersome and ineffective. Let's get a check on the oil markets now. See, oil prices were a little change in early Asian trade today as concerns eased about potential supply disruptions due to the conflict between Israel and the Palestinian Islamist group Hamas. Brent crude rose 12 cents to $87.77 a barrel. US WTI crude rose about 3 cents to $86 a barrel. Brent and WTI surged more than $3.50 on Monday as the military clashes raised fears that the conflict could spread beyond Gaza, but settled lower in Tuesday's session. While Israel produces very little crude oil, markets worry that if the conflict escalates, it could hurt Middle East supply and worsen an expected deficit for the rest of the year. To the grains market, now Chicago wheat futures extended losses that began overnight and trading following a short-lived rally on the back of rising tensions in the Middle East as lower prices and hefty supplies in Russia kept attention on export competition. The most active Chicago Board of Trade wheat futures, WV1, that was down about 2.5% at $5.57 a bushel, pressured by forecasts of larger Russian grain crops and exports. Meanwhile, corn prices fell, dropping about 0.7% at $4.84 for half a bushel. Minister of Finance and Central Bank governors of G24, an intergovernmental group focused on international monetary affairs and development finance, have met on the sidelines of the 2023 IMF World Bank annual meetings holding in Marrakesh, Morocco. After the meeting, Nigeria's Minister of Finance, Mr. Wale Edu, spoke with Channels Television on the high points of the deliberation. Take a listen.
Interest rates are so high around the world that the issue of debt is one that is high on the agenda. And of course, there's a financing gap. There is not enough funding to fund the developing requirements of the poorer countries, and that's what the conversation was all about. The need for reform, the need for change, the need for improvement. In fact, they talked about a bigger, a better, and a bolder World Bank group. That would, I think, also mobilize the private sector funding. And of course, for Nigeria, one of the high points was that something that the government of President Bola Ahmed Tinubu has emphasized also came to the fore here, and that is domestic resource mobilization. The fact that we have to depend on our own resources, our own savings to a larger extent, must be efficient in collecting taxes and fees and payments that are due. We must be more efficient and cost-effective with our expenditure, and we must create a bigger base of financing from our own resources. We must rely on ourselves, and we must pull ourselves up much more than relying on others. So we're saying we want greater representation at the table at which some of these decisions are taken. And of course, coming back home, it's all about what is being done, and there are major steps being taken to reform the tax environment. There will shortly be an announcement of measures which rationalize, which improve the efficiency, and which consolidate the issue of tax revenue and, as I said earlier, domestic resource mobilization.
And the International Monetary Fund downgraded Nigeria's economic growth by 0.3 percentage points to 2.9% for 2023. Meanwhile, also stated that global economic growth was projected to slow from 3.5% in 2022 to 3% in 2023 and 2.9% in 2024, well below the historical average of 3.8%. Joining me now for this conversation is Kelvin Emmanuel, CEO, Dairy Hills Limited. Joining me right here in our Lagos studio, not Abuja. Great to have you.
Good morning.
Good morning.
You for having me.
Yeah, so this is quite a bleak forecast, coming from the IMF. But I'm feeling no surprises here. All the economies, global economies are going through a lot right now with inflation, and they've had to tighten rates, since 2022. So it is expected that growth will slow.
Well, to be honest with you, I'm not as optimistic as the IMF on their
So you see optimism?
Yes.
For 2024.
2024
Right.
growth projection. I think in the last quarter, Q4 of 2023, the GDP growth rate is going to go up from 2.53%, so anywhere around 2.7 or 2.8%. In 2024, however, I believe that the GDP growth rate is going to add around 1% from the current position that we're in. And this is because, a sensitivity analysis was done on what the impact of the commercial refinery in Lagos is going to have on the Nigerian economy. If you check the effect of backward integration through import substitution of when transportation and non-transportation fuels, and they discovered that every 10% capacity utilization that refinery adds, you're going to have 0.1% GDP growth addition to the Nigerian growth story. So I'm not expecting that, the capacity utilization for that refinery will reach 100% by the end of 2024. I believe, for example, because if you look at GDP, it's simply a component of 4 different factors: government spending, exports, consumer spending, and investment, foreign direct investment, foreign portfolio investment. We know the growth story today. The only thing that we're seeing now is government spending. Exports are not doing so great. Consumer spending, there's demand destruction because of the regulation of PMS and energy inflation. And you can see that LPG prices is now up to 1,200 naira per kg. I expect it to go to 1,400 naira per kg before Christmas. And then you can see the investment story is hampered by the issues at the Central Bank of Nigeria, the outstanding forwards, the issues on FX swaps, and the encumbrances to the external reserves. But however, I think in 2024, you're going to see that energy inflation is going to start to slow. In Q1 of 2024, you're going to see that the inflation will peak, and you're going to see that gradually there will be like a resurgence of non-speculative foreign direct investment. NNPC will start to remit more money to the Federal Account Allocation Committee, and you're not going to see the share deficit financing in 2024 budget will reduce. The share of the budget that will come from debt will reduce a little bit. And I don't see the exports will improve, because if the refinery starts, you're going to see more exports go out of Nigeria that is not the typical crude oil and agricultural commodities. You're going to see more semi-processed and processed goods go out of Nigeria. So I'm not exactly as bearish as the IMF is and some other analysts are on the Nigerian economy. So this is why.
And the same thing with the UK government too. They weren't fond or pleased with the forecast, for the UK economy as well.
Well, the reason why Europe is going to continue to suffer, for example, is because, for good reason, they believe that in Scotland, for example, they shouldn't refine crude oil and not sea. You shouldn't, because of the whole climate change and clean energy narrative. Liz Truss, who lasted for a couple of weeks, tried it, and then she was booted out by the activists. Look, the Europe needs energy security. The inflation you see in Western Europe is mostly because of lack of energy security. The fact that the supply of gas through Nord Stream 1 was taken off, and then the supply of crude oil from Russia was taken off, and then Russia had issues with importing catalysts to maintain the refineries, to produce middle distillates like diesel, like that factories in Europe need to manufacture, and that affected inflation. The fact that going into winter months, you need gas, you need propane gas to heat up houses, to heat up plants. and for cooking gas, and that is affecting them. So the story in Western Europe, in Germany, in France is a little bit insulated because 68% of their electricity comes from nuclear energy and not thermal plants that are powered by gas. It's going to continue to be the same as far as we have the situation as it is in Russia, and the fact that Russia is having to export some agricultural commodities and fertilizer components like muriate of potash, ammonium nitrate gas through a proxy, Belarus, and then Belarus was prevented from moving these commodities to the Black Sea by Lithuania and all the other countries that are hostile to Russia and Belarus because of the occupation of Ukraine. So I don't think that if the impasse between Russia and Western Europe and the G7 is not resolved, that the energy situation in Europe is going to change anytime soon.
Right, and definitely, bringing it back here, we did see that the group CEO of the NNPCL, talking about IMF, they're pointing out that we're not getting enough, production out there to even benefit from, rising oil prices. And now we have Israel-Hamas conflict also disrupting, the oil market. So, looking at all of this, the group CEO is saying by 2024, we'll be exporting refined products. How realistic is that? And what can be done to make that a reality?
Well, the export of petroleum products in 2024 that he's talking about is definitely not going to come from the moribund Port Harcourt refinery that was finished in 1989, 210,000 barrels processing capacity. In my opinion, those refineries are dead, and the president should sell it off as scraps and stop wasting turnaround maintenance money on those refineries. They're going to come from the commercial refinery in Lagos, Dangote refinery. In terms of how you go forward, I am of the opinion that the president should commission audit on NNPC, which is going to be the first prerequisite for them to go and start doing book building to get NNPC to IPO. Because NNPC needs capital to be able to invest in projects. They need capital to invest in the midstream processing, liquefaction of gas, separation of gas, treatment of gas into propane, into isobutane, setting up a splitter plant to convert propane into butane, because Nigeria consumes more butane than it consumes propane, to reduce the cost of LPG, cooking and AC gas in Nigeria, which is a huge factor, and which also plays into the story about
because cooking gas prices are rising already.
Yes, cooking gas prices are rising. So for you to get cooking gas prices up, you have to do a conversion. It's a splitter process from propane to isobutane to reduce the amount of isobutane that is imported from Argentina, from the US, from Angola, and from Equatorial Guinea. And the interesting thing, if you can reduce the price of cooking gas in Nigeria, you can increase the adoption of cooking gas in place of firewood and reduce wood logging.
And we can meet our climate
and you can meet up your climate change
goals.
net zero goals. It's part of the whole energy transition program initiative. So for me, NNPC needs to raise capital. They need to go to IPO, sell equity, raise capital, fund projects like setting up midstream processing plants for LPG, fund projects like setting up high-pressure internal transmission pipes. You need a pressure transmission pipe in the southeast. You need to complete Obi-Tere, Obiaku, Obiafu, Obrecom, Oben, Obi-Tere, 127 kilometers. You need to complete AKK. The stock between Abuja and Kaduna. Kaduna and Kano is going on. Ajaokuta and Abuja is completed, 614 kilometers. They need money to complete it. And the reason why it's important is because you need to be able to deliver gas around Nigeria to even make CNG a reality as an alternative energy to decouple the impact of the regulation of PMS. So in my opinion, NNPC needs cash because it also needs to fund NMGP to export gas to get revenues to fund the budget and reduce the debt financing in the budget. So in 2024, it's important that the GC of NNPC works with the Minister of State for Petroleum, works with the Minister of Finance to audit NNPC, take NNPC to an IPO list, raise money, and fund capital projects. NLNG also needs to be funded. Train 7 is being funded. Train 8 needs to be funded. They need money to be able to commission FIDs. NNPC is holding 49% for the federal government. For you to fund it, you need anywhere between $5 and $7 billion to fund a new train, to increase the output so that you can get more dividends, get more corporate income tax, and get more withholding taxes to fund government budgets. So these are the things that NNPC needs to be focused on going forward in 2024.
Before we can start exporting
Before we can start exporting refined products, before we can start taking advantage of gas. Gas is the key to solving the fiscal problems that Nigeria has. Qatar did $65 billion in gas revenue a year. Before, there was like an embargo on Russia, and Russia was removed from the SWIFT system of banking and Target 2 for settlements of international banking transfers, and they were excommunicated from the global financial system. Russia was earning about $900 million a day.
From gas?
From gas, exporting gas through Sakhalin-2 to Russia, to China, from Mongolia, exporting gas to Western Europe through Poland and Germany. Russia was earning $900 million a day. So, in my opinion, I don't see the reason why we're not taking advantage of the national gas policy framework that was designed in 2017 to be able to increase the output of LNG, to be able to increase the gas pipeline infrastructure we have in Nigeria, which currently sits at about 1,800 kilometers. Nigeria needs about 10,000 kilometers of gas pipeline infrastructure. And the interesting thing is this, Ladi. For you to power Nigeria, you need electricity, on-grid electricity. You can't increase generation capacity without investing in gas pipes to the thermal plants for generating companies to increase the output of electricity.
All of these
everything is
interconnected.
Everything is interconnected.
The
reason why NNPC has commissioned a project to develop about 135 megawatts of generation capacity in Abuja is because AKK moved from Ajaokuta to Abuja, and they have a city gate in Gwagwalada where they are designing that plant. So Gwagwalada, that city gate is basically going to feed gas into the generating plant. For you to have Egbin increased capacity for Lagos, which currently sits below 1,000 megawatts, for a city of 20 million people, they need gas. You need to increase the amount of gas. Currently, only about 500 million standard cubic feet of gas goes through the pipes in Nigeria, which is not enough.
Right, but looking at all of these forecasts, quite gloomy. But going into 2024, how do you think, or what should we be doing now to beat these forecasts and actually do better than what the IMF is forecasting? And looking at the CBN, they have inflation to deal with, currency devaluation at this time. What should be the plan of action to change the narrative for 2024?
Well, in going forward, the reforms has to focus on, the governor needs to take out direct intervention and development finance away from the central bank and send it back all to the MDAs. The governor needs to reform the CBN Act of 2007. The governor needs to recapitalize the banks in Nigeria because of the issues on their gearing ratio, total capital over total risk-weighted assets. Their total risk-weighted assets has gone up. The governor needs to work with, advise the federal government, Minister of Finance. The Minister of Finance needs to work with, they are on the right path. Look, Tayo Wodele announced that they started an harmonization of the tax. They're going to reduce from 62 to less than 10. They need to increase the tax to GDP ratio to anywhere around 12 to 13%. Every 1% they add is going to add $4.4 billion in revenue to the government. They need to reduce the debt financing in 2024 from 43.8% to at least 35% and keep decoupling it down to reduce how much of debt servicing they pay and reduce the ratio of the government revenues to debt servicing ratio. In 2024, they need to allocate more money to areas that move the economy. They need to reform the educational system, give 12 to 15% to education, 12 to 15% to healthcare. You need to invest money in areas, reduce. So now you've taken off petrol subsidy, and that's 29% of it, that's 2.5%, of it that goes into paying petrol subsidy. Allocate it back to healthcare and education, areas that actually improve the lives of Nigerians and can improve the productivity and output of Nigerians to contribute to GDP growth.
Because we need to produce more going forward.
We need to produce more. and the solution, the solution to changing the story about the real sector and manufacturing lies with inflation. And the reason it lies with inflation is because Nigeria's supply chain for manufacturing is exposed to FX. Yeah? Energy and input that goes into food production. So if you're able to slow down inflation, what you do is that you slow down the increase of the MPR, and the MPR will start to come down gradually. You send back credit to the real sector, and the real sector can produce. As it stands today, a lot of companies cannot open LCs because the banks basically are not able, apart from the backlogs, the banks basically cannot quote LC rate at the I&E rate. They quote it at premiums, and these companies can either not afford it or it doesn't make sense for them. So you push more people to the black market, because the banks are having to source for LC dollars at premiums that are higher than the I&E rate from companies that are bringing in FX into Nigeria.
Right.
So
much.
If you decouple inflation, you decouple interest rates, you send credit back to the real sector, you reduce the risk that banks take to lend money to the real sector, and you get the economy back on track.
Back on track. So much to unpack there, but always great having your perspective. Kelvin Emmanuel, CEO, Dairy Hills Limited, was great having your perspective.
Thanks,
and we do hope that we're able to beat the forecast, going forward.
I think 2024 GDP growth rate is going to be anywhere around 3.4 to 3.6%.
All right. Yes. We're looking forward to that. Thank you so much for coming.
Thanks for having me.
All right. After the break, AFEX Commodities Market Update is next. Do stay with us. All right, let's get a check on the AFEX Commodities ecosystem. In the last trading week, it was a mixed performance across key indicators. Turnover fell by 0.35%, closing the week at 1.65 billion naira from 2.55 billion naira the previous trading week. And the volume traded also fell by 0.46%. Number of deals traded dropped by 0.33%, closing 124 from 185 in the previous week, while the AFEX Commodities Index and the AFEX Export Index maintained at 588.25 and 229.25 respectively. To the volume of contracts traded now, there was an increase in volume across paddy rice and sorghum. Price across export commodities, we see paddy rice, soybean, sesame, ginger, wheat, and sorghum. They all maintained at 456 naira, 377 naira, 1,247 naira, 989 naira, and 300 naira respectively. To other commodities, we saw positive performance with cashew nuts. That rose 0.24%, closing at 586 naira, 19 kobo. We see cocoa there rising 2.68%, closing at 2,068 naira, 80 kobo. Across the grain commodities, maize witnessed an increase of 30.41% and closed at 435 naira, 14 kobo per kilogram. We see ginger there, 989 naira, unchanged. For more, you can visit www.africaexchange.com. You can also download the app on iOS and Android. Remember the website, www.africaexchange.com. All right, now let's take the conversation forward now. As the world moves along the path of advanced financial technology, the agricultural sector is not left out. There's been a rise in innovative payment solutions within the agricultural value chain. Let's get a sense of what to expect and how it is right now. Joining me is Victory Onya, Product Lead, Innovation and Technology at AFEX. Great to have you on the show. Good morning.
Good morning. It's nice to be here.
Agriculture has traditionally been a cash-based industry. Tell me how innovative payment solutions, address the specific needs and concerns of farmers, traders, and other players within the agricultural value chain.
Okay, thank you for that. To give context, before the advent of improvements in payment systems and innovative payment solutions, transactions in rural areas were basically and primarily relied on cash handling and then cash-based transactions. And so this means that farmers had to receive payments in cash, had to make payments in cash, and this came with a whole lot of challenges, which involved theft, involved them being victims of attacks because they even had to travel long distances to access bank branches. Also, we could see that they were alienated and had limited access to financial services like savings, like credits, like microloans, and even insurance. And so this hindered their financial ability and also hindered their financial growth. Additionally, we could see that handling cash manually also did not give proper records and accountability. And hence, these farmers and then rural dwellers and settlers did not have the ability to properly manage their finances and then track their finances. Improvements in payment solutions have been able to bring about solutions that kind of cater for these challenges and problems by providing secure methods of payment that are easy, convenient, and even accessible, and also very transparent. And so for the farmer, this means that he's able to make payments very fast and also receive payments swiftly without any concerns about the risks or challenges inherent in it. For the trader who may be making bulk transactions, this means that he's able to settle also easily and then transparently. And also you find out that the feature of digital record is also very vital, as it enables each of the players within the agricultural value chain and sector able to manage their finances, track income and expenses, and able to have proper and efficient financial management.
All right, in what ways can, these solutions bridge the gap and provide better financial access for farmers who were previously excluded from formal financial systems?
I see. In terms of bridging the financial access gap, this means that farmers and rural settlers who previously had been excluded would now have access to financial services like loans, like insurance, and also not just have access to it, but have access to it in their location and even on the devices that they use. And for this, I'm referring to devices like their feature phones. So I'm talking USSD banking. Farmers would be able to access a wide array of services that cater to their needs. Alongside those who have smartphones, will also be able to access solutions that are user-friendly on their devices. And this has a whole lot of advantages because it enables these farmers to be able to easily make transactions, receive payment, make payment, easily access insurance for their commodities, and see improvement in their overall lifestyle living and improved standard of living. For us at AFEX, we have deployed a couple of solutions within this, within payment, obviously, to be able to improve the lives of farmers, improve ease of receiving payment, ease of making payment, and also the risks inherent in this. And so far, we've seen improvement in the standard of living and also in the transactions that our farmers carry about with us at our various warehouse points.
All right, talk to me about the major challenges in implementing innovative payment solutions in the agricultural value chain, and how can these challenges be addressed going forward?
Thank you so much for that question. We know that with these new solutions also come its challenges, and one of those is limited digital literacy among farmers and then a lot of the populace residents in rural areas. And this is because we understand that a lot of them are semi-literate or even do not have any form of access to education whatsoever. And so adoption of these solutions and services may be a bit taxing for them. Also, there's the challenge of inadequate infrastructure in these rural areas as regards to internet connectivity, alongside data security and protection concerns that these farmers may have, giving out their information to payment service providers. Also, there's the challenge of risks associated with deploying solutions that are not in the same language as the farmers understand. So there's a language barrier. A lot of the solutions that are being deployed over time were basically in English or the three major Nigerian languages. And so it's been a huge stress on the farmer to be able to adopt it in the language that they understand. And in terms of solution, first of all, would be to design targeted training programs in the rural areas to achieve two things. First is to create awareness so the farmers understand the importance of these solutions and how it can improve their lives in terms of personal transactions and even their businesses. Secondly, we cannot downplay the public-private partnership in investing in infrastructure that aids connectivity. And this will also encourage other payment service providers to develop solutions that would improve transactions that the farmers have. Also is putting up data protection policies that would best secure farmers' data. And last but not the least, the collaboration between fintechs, government, agricultural stakeholders, and corporations to ensure that all of these challenges are reduced to the bare minimum.
All right, what does the future of innovative payment solutions look like, in this value chain, and what trends are you anticipating?
I see innovation in payments within the agricultural sector. It looks very, very promising. And we can envision the adoption and increased growth of mobile-based payment solutions, blockchain-based solutions, as well as the use of artificial intelligence for risk assessment and even for decision-making. Also, we can see the use of and the improved adoption of data analytics in terms of payment. And this will do a couple of things. First of all, there's predicting behavioral patterns of users. And this will help in terms of security measures where businesses are able to adequately track trends and monitor user behavior such that when there's an unusual behavior which can possibly show a security breach, this can be flagged and attended to with immediate response. Also, we see customer profiling. So using data analytics, one will be able to check and understand the different and categorize users basically so that they know users' preferences and be able to design loyalty programs or solutions that best cater to meet each of these needs and also increase customer retention. Also, there's predictive maintenance where users of POS machines and other manual infrastructure using data analytics, you're able to predict when each of these systems need maintenance and effectively allocate resources to ensure that this is done. Also, we can see the improvement and adoption of solutions in terms of cross-border payments to bring about ease and reduce pricing and fees that's around cross-border payments. And we also envision that users will be able to make transactions within borders easily and without any restrictions. Overall, we envision that these trends in payment services in the agricultural industry would help to bridge the gap that has existed for a while and further advance inclusion in agriculture as regards payment.
Right, it would be great to move from a cash-dependent sector to more strategic payment solutions. Thank you so much for joining us, Victory Onya, Product Lead, Innovation and Technology at AFEX. Thank you.
Thank you so much. Thank you.
All right, it's day 3 of the IMF World Bank annual meeting in Marrakesh, Morocco. We have our team of reporters there bringing us details from proceedings so far. We have our very own John McQuarrie, Channel TV correspondent, right there in Marrakesh. Ini, great to have you. Good morning.
Yeah, thank you so much, Nadi. Well, as you have said, it's day 3. One thing I'd like to say, first of all, is Nigeria is now the chair of the African Governors Forum. That means that Nigeria is the chair of all central bank governors. And Nigeria will be hosting central bank governors in the country in just about a month. So that's one thing that has come out of the meeting on this day 3. And then other than that, I can tell you that very serious conversations that have taken place here. One of that is the issue of debt cancellation. We know that a lot of African countries, emerging economies, are really under a heavy burden of debt. Debt servicing is gulping a whole lot of their revenue. I mean, if we talk about Nigeria, we know that about 90% or 99% thereabout is being used for debt servicing. Of course, it's a source of worry for the world, for the IMF, for the World Bank. I don't know if you remember, I think on Monday, I had a chat with the Secretary General of Commonwealth. And she said, well, one of the things we have to do if we really want to solve the debt problem is to go back and check out what's the source of this debt. And that conversation has expanded now, looking closely at the source of that debt. What's some findings have come up with? What about the issue of surcharging, the surcharging policy of the International Monetary Fund? As we know, a lot of developing economies get loans from IMF, from the World Bank, and they're saying that the surcharging policy is even increasing, the debt burden. So, just for information, surcharging is additional fees on loans to the most indebted middle income borrowers. Now, the problem with that is the people who now fall into this, who get this surcharge, what they say is about 3 to 5% of the loan, are the poorest of the poor. And these are the people who need help the most. Instead, they are the ones who get this surcharge, which increases, their debt burden, and of course saps the revenue that they would have used for infrastructure development and in-country boosting of economic growth. So the World Bank president had a briefing this morning at 8 a.m. Funny enough, we're using the same time as Morocco and Nigeria. And he says that Africa cannot develop by borrowing or relying on people. We know that Minister of Finance, whom we spoke to yesterday, I saw him earlier on the show, you used that track, also said that we have to look inwards. And the World Bank president is saying, not just looking inwards within countries, but also within the continent. If we can have more of intra-African trade. And he got it right on point when he said that it's more difficult to export a commodity from one African country to the other compared to if you're exporting it out of Africa. And these are some of the issues. We have AFCFTA, but how impactful is it? How much of the countries are working on it? And it's all because of these bottlenecks, paperwork, and perhaps a lack of confidence in African-made products. And so the World Bank president has said, yes, we agree the surcharge policy of the IMF is increasing the debt burden, but there's no way African countries, when you look at the Western countries, developed countries, how many loans did they take to get to where they are? So it would be better if African countries, first of all, will look within themselves, within their countries, and on the other hand, also trade, within themselves in the region. That way, you reduce the demand for dollar, for instance, and that will solve a lot of problems when it comes to FX shortages in a country like Nigeria. So it's a whole lot of conversations, Ladi.
Right.
Kind of captured one program, I can tell you, but we expect, I think, better than all of the talks, is the changes that we will see. Minister of Finance, Mr. Wale Edun, had said there are practical steps planned, after the meeting. Well, we hope to see that and also see it in other African countries. As you know, because this meeting is holding on an African soil, and then there's a whole lot of attention on Africa. But practical steps, obviously, is what we'll be looking out for after this.
Quite interesting. First time in 50 years, the meeting's happening right here on African soil. Thank you so much, Inijo Mekwa, for that update. And we know you keep sending us updates as they come. We do have our team right there in Marrakesh giving us blow-by-blow of all the events and proceedings going on right there in Marrakesh. Thank you so much. All right, let's move on now to London. Let's take a look at what's happening right there in London. We have our correspondent right there, Juliana Olanka, right there in London. Great to have you, Juliana. Good morning. So we see Britain's busiest airport, that's Luton Airport. They say all flights are suspended until 3 p.m. due to a fire outbreak. How's this being received by travelers over there?
Well, yeah, that's absolutely right. It was a horrifying blaze, according to the images that I've seen on social media, because of this fire that started at about 8:47 p.m. yesterday at the Terminal Car Park 2. And now, at this time, we're not sure what the devastation is going to be like, but in the car park there were expected to be between 1,200 and 1,500 cars. Lots of passengers who live in the UK are able to park their car for a short-term or long-term time whilst they travel abroad. But there was a fire. We believe it was supposed to have started by a car. I think there are about 100 firefighters from Bedfordshire Fire and Rescue battling to put the fire out. I believe 1 staff from the airport and 4 firefighters have been taken to a hospital. No fatalities as of this morning. So at least 70 EasyJet flights, Ryanair flights and Wizz Air flights have been cancelled. All flights into Luton Airport have been cancelled. I believe there are about 50 of them. And yes, I believe flights are going to be suspended till about at least 3 p.m. But what Luton Airport are advising passengers this morning is check before you travel. Make sure you go onto your airline's website and see if there is an update.
Right, still a developing story that we'll keep tracking that. And we'll be talking about, IMF forecasts all morning. And we see the IMF says the UK economy will grow next year at the slowest rate in the G7 group of leading industrialized economies. And it seems this forecast isn't sitting well with the UK government.
No, it isn't. And I think the British government has had a bit of a love-hate relationship with the International Monetary Fund over the past 2 years. I think the IMF have been very quick to caution Britain in terms of its measures to try and boost economic growth. And I think UK economists, particularly the Chancellor Jeremy Hunt, in his response to the IMF chief, is basically taking what they're saying with a pinch of salt because, as we know, as Nigeria should know about the IMF, lots of its predictions and forecasts are based on assumptions, and some of those assumptions are not up to date because when they do set out a lot of these forecasts, they're looking in the back. They're looking in the rearview mirror. They're not looking at what's happening on the ground. So what they have said is they've upgraded Britain's growth slightly this year from 0.4% growth to 0.5% growth, which is one of the slowest growths in the G7. I think we're just behind Germany on that. But next year, we're pretty much right at the bottom of the G7 rankings with growth of 0.6%. And as I said, I think the Treasury are taking it with a pinch of salt because they said the IMF have based it on 2 assumptions. One is that Andrew Bailey, the Bank of England governor, will continue to raise interest rates from where they are at 5.5%. The Jeremy Hunt thinks that is going to be unlikely. And the second is that they haven't managed to look at GDP growth for the month of August and for the month of September. And they say you would need to be able to do that to cast such assertions. So, yeah, once again, the IMF have given the UK Chancellor a slap on the wrist, but they're not taking it lightly. And they have come back and said that they think they're wrong.
Right. Well, I guess it's day 3. We're looking at for what the World Bank has to say going forward. Thank you so much, Juliana, for the update. Thank you.
Thank you.
All right, now let's head to the markets now. Let's take a look at what's happening with local bonds there. We see yesterday we got that pullback in the market. If we look at the picture right there, we see it's mostly red with the all-share index 66,984 points, 0.17% down. That's what we closed at yesterday. Equity cap sitting at 36.801 trillion, now 64.12 billion down. And we see all-share index year-to-date performance sitting at 30.70%. Let's look at the sectoral performance. We see banking there took a big hit yesterday, 1.11% down. Consumer goods also down, not as bad as banking counter, 0.11%. And industrial goods unchanged, oil and gas unchanged, insurance counter also down 0.71% yesterday. I did talk about the banking counter. Investors in tier 1 stocks have gained a lot in the first 9 months of 2023. So we're seeing there that the banking counter there having some pullback from yesterday's performance. Let's bring in Mr. Abdurrashid Morma now, trader, TRW Stockbrokers, joining me via Zoom. Good morning. Great to have you.
Good morning, Ladi. How are you?
I'm doing great. So looking at that pullback yesterday, lost that 67,000 level. What are you seeing for support zones and maybe another resistance coming up soon?
Okay, let me start. Let's talk about figures, the data. The market, as I said, since for the past 3 weeks, have been consolidating within a range. So we are looking at current support and resistance levels. We're looking at about 66,000 points or about 68. For the current one, 66,000 to about 67,150. So market has been ranging within that axis. Yes, it does call for concern because a lot of people think on the long term, the bull market is still intact. But for the short term, as we speak now, the market is consolidating. So all those huge profits we used to see, it's gone for now. People are looking for about 30%, 40%. If you even get about 10% in the market now, that means you're a very good trader. So, but as we speak now, the market is actually within a resistance now because market pulled back yesterday, but the current index now is trading about 66,984. We've done, we are now at 67,162. So it's really about some points above the 67,150. So we monitor how the market goes, but as it is, I'm not seeing any breakout yet. The market will keep consolidating. One good thing about consolidation is, for some when it consolidates, it breaks out. If it breaks out to the upside, it's good for us. If it breaks down to the downside, it's not good for the market. Either way, a breakout or a fake out, we're looking at about a 2,000 point spread, either up or down.
All right, so looking at the market right now, what catalyst do you think could come out in the short term that could bring back a rally?
The truth is, for people trading, this is where we know the good traders. And the good traders, if you check out what they're actually going into now as we speak, we short stocks like Owando. Owando has been very active. For some time, they've been playing with that stock, going in and coming out. Recently, we saw moves, I think, UBA. But to speak, we're looking at, I think for volume so far, the volumes have been low. But basically, we're looking at Transcorp, Access, Owando for now. Those are the ones investors are actually playing with now for entry and exit point. The most important thing for now is that every stock has a support and resistance level. So they should know, if you're able to know where all these key supports are, then they are good for you for in and out, for entry and exit points. But no breakout for that. I don't see any breakout in any stock for now, except the penny stocks. You see stocks like Thomas Watt, John Holt, Dark Communication. Those ones have been moving steady, you understand? So, but when we come to the big players, and that's the NGX 30, 50, the banking sector, the big players, there are no sign of breakouts from any of them so far, just consolidation.
All right, thank you so much, Mr. Abdulrasheed Mama, FT trader, TRW stockbrokers. Looking out for how the market closes today. Thank you so much.
Thank you, everybody. Yep.
All right, so we see the activity chart there, volume was down 4.18% at 257 million units of stocks valued at 7.8 billion. So we had more value compared to Monday's trade. So deals 6,500. That's also in the red, down 5.95%. So we'll be looking out for the mid-week session that's closed today. We'll see how it pans out. Maybe the bulls will have it or the bears. Let's look at other markets now. Talking about the crypto market now, let's take a look at what's happening. We see Bitcoin failed to gain pace above that 27,800. So we see on the board now, red is the dominant color right here in the crypto space there with Bitcoin this morning down about 1.96%. Let's look at the complete chart now. Look at the cryptocurrencies we track on the top 100 there. And see the sentiment is fear. It's been on neutral for a while now, but now we're back to fear, showing that traders are quite afraid right now. getting some skin in this market. Bitcoin, $27,102 this morning. And we see XRP going further away from that 50-cent level, now 48 cents, down 2.37% again, just like yesterday. BNB, native coin for the Binance Exchange, $205 there, 1.05%. So we see red is the strong color. Cardano, 24 cents there, 2.10%. Rumi Ofi is going to tell us what's driving sentiment now. Let's look at the top traders now. Top gainers, Render, they're $1.79. 3.58% up. eCash also getting on the top gainers counter there, up 2.17%. Let's try and get Rumi Ofi now, financial market analyst. Hello, Rumi. Good morning.
Good morning, Ladi. Good morning.
Yeah. So, Rumi, we're seeing a lot of red action in the market now. Tell me what's driving sentiment. We know Israel-Hamas tension is getting investors a little jittery right now.
Ladi, we've discussed this a bit, but maybe we'll see the analysis in the way it sees the future. The price of oil, when it goes up right now because of the challenges that are happening in the world, geopolitical uncertainties, see what is happening in Israel. All of this has a huge role to play in the crypto market as well. You know, the price is some hours ago dropped to, I think, below 27,000. This is because it seems that the price of oil is going to move up. And when that happens, we're going to see a situation where inflation is also going to be going way the least expected, which the Fed will have no choice than to increase the hiking, to start the hiking spree, if you ask me. All right, this is also going to make a whole lot of things break in crypto because it's a risky asset. You know, so let's also not forget the fact that Iran's oil is still under sanction by the US, so which means that the price of oil has this tendency to go higher. You know, so all of these put together is going to affect the crypto market. People are obviously going to prioritize about what they should use their money for. So you don't expect someone that is struggling with some of the basic things of life to jump into crypto. And we're going to see some possible downside. I'm not trying to play the devil's advocate here, but these are realities that those in the industry fail to understand. We understand that we usually call something October, where the market is used to going up in October, but we're going to probably see all of these not happen as usual. So people should expect the unexpected because the Fed is going to look at they are going to come up with their minute and see the possible action to take. We're seeing Bitcoin go down, and we're also seeing the DXY go down, which also, for me, is very risky and unfavorable to the market.
Right, it's looking like October is looking quite bleak in the crypto market right now. And it's looking more like the oil trade might be the best bet at this point, or maybe some other safe assets, you know, right now, since it looks like it's risk-off sentiment we're seeing in the market. But looking at the whole, the space now, that's the crypto industry, are there tokens or coins that you feel might be resilient at this time?
Yes, so Ladi, I don't think the industry has not seen this whole pressure before. The US is thinking of probably a soft landing, but the way it's looking, the US have a hard landing. I don't think there's going to be an escape route. If you ask me, a couple of persons earlier in this industry usually say Bitcoin is a hedge on inflation. It is not a standalone industry right now. It's a new industry. It gets inspiration from the traditional financial market. With time, it's going to grow. But now that it's in its infancy stage, people should stop using all of those PRO to get people into the industry. Things are going to happen. Things are going to break. And the market might see downside. And we're going to probably be very quick to recover. So going forward, people need to be very careful. No escape route for now. The best is just to, if you ask me, I would want to say yes, the best escape route for me is education. To get yourself educated and see some of the opportunity when the downside comes.
Right. Definitely, Rumi the Bear, they're expecting some downside in the market. Thank you so much, Rumi Ofi. Always great having your perspective. Thank you.
Thank you very much, Ladi.
All right, so look at the top losers now. See, Tesla is topping the counter, 66 cents, down 9.19%. So on the top 100 coins, no double digits losses. The YDX, $1.89, down 5.53%. We see IMX on the lower bottom counter there, 51 cents, 4.40%. So that's the sentiment in the market right now. It is fear. That's a wrap on the program. Don't forget to join me again on Business Incorporated 1:30 for more updates and developments in the world of business. Thank you again for watching. I'm Ladi Williams. Bye for now.